Well, again, welcome out, everybody. I think we still have people coming in here over the next minute or so, but we'll go ahead and get started here and let them join us. We're also recording this, by the way, so anybody that wants to listen to it afterwards, we'll have replays of that available. If anybody is here with us for the first time, let me just start out and give you kind of a brief introduction here. My name is Ferre. We'll have Steven Swenson on here in just a moment here. I think he's having a couple issues with his computer, but I think he's just about logged in. And we conduct these webinars, these workshops, about every month. We'll hold a workshop like this. And we found doing them on Saturdays tends to be a good time for people. So if this is the first time that you've come to this webinar, we'd just like to thank you for coming out and joining us. We're not sure how you initially came in contact with us. It may have been through YouTube videos. We have a lot of YouTube videos that are out there that explain different aspects of tax sale investing. And that's oftentimes where different people have come in contact with us, but we have a lot of information that is that's out there. And so, yeah, we appreciate everybody coming out here this morning. Now, if this is your first time doing webinars like this, it's a great format for asking questions and for being able to interact throughout the training. In fact, I would say the more that you interact in the training, the better the training is, and I think the more you can learn from it. So don't hesitate to ask questions. Feel free to do that at any point. We enjoy getting those questions, and we do anything we can to answer them at different points throughout the webinar. So you're always welcome to do that. We certainly welcome it. Steve, are you on now?
Yeah, sorry about that. I had a computer glitch there for a minute, but was able to get back on. So excited to be here this morning. I'm excited to talk about tax lien and deeds and go over really how you and me have been doing this strategy for in a year or two, it'll be almost 20 years.
Yeah, it has been a long time, and you know, in fact, that's probably something we ought to get into right now is just talking a little bit about who we are and what it is that we do. We don't spend a ton of time on this, but we do think it's important you understand where we're coming from and what it is that we've done in the past. And from here, once we get past this part, we'd like to get into different topics here related to tax sales. But yeah, like Steve mentioned, we're not too far off here from being about 20 years into this, which we started off in 1999. I think Steve and I are cousins. He attended a tax sale in 1999 while he was working as a real estate agent. He was introduced to it then and essentially introduced it to me. And I guess when we set out at the beginning to learn tax sales, it was totally different than it is today because it was even less understood than it is today. And it was also at an odd point in time where the internet was, the internet was becoming very common, but counties were a little bit behind the times. So we were seeing counties introduce county websites, online auctions. Everything about the investment was changing right about the time that we got started. And so it gave us a unique opportunity to figure out how this new online system worked and what kinds of advantages were there. And the reality of it was that the investment, I don't know, prior to the internet, it was much more difficult, I think, to pursue this investment than it is today. And it is an investment that simply gets easier and easier with time. So that has been fantastic. As we've gone over the last 20 years here, we've watched as the investment has grown and as counties have really caught on to the fact that it is a great way for them to bring in revenue. If you want, Steve, you can cover some of these other things about us here.
Yeah, absolutely. I mean, essentially what we started doing in early 2000s was here in Utah at that time, a lot of the training companies, the real estate training companies were here. And so not only doing research on our own, but we also started working as coaches and helping some of these seminar companies with their tax sale products. So in 2007, by that point, we had been doing this for quite some time and had been training, literally hundreds of students over that time. we decided to start our own company, and essentially what we did is we provided all of our training products to these large seminar companies. So what we really became was a fulfillment company for the seminar companies. So they would take our books and our programs and they would private label them and use them for their TV infomercials, or use them for their large seminars that they did across the country. And so our program was being sold on these large stages, and we did that for over a decade. We really did that, and we taught over 60,000 students nationwide. But in 2016, we decided to quit working with the seminar companies. We had just had enough by that point. We had been burned, and luckily, because of our training and the service that we provided, we were able to keep an A-plus rated business with the BBB, which is incredibly difficult to do when you're a training company. And so we decided to just quit working with the seminar companies and offer our product directly to the student. And so that essentially what we did is we started Tax Sale Support. And this is our new training company where we're just working directly with our students on a one-on-one basis and through our programs.
Yeah, in fact, the decision to stop working with those companies and to bring the training direct was all about how we knew exactly how the seminar companies worked. We knew how much of that money was going to pay to try to put people into seats, and how little of the money was actually going towards any kind of training at all. And we knew that just by cutting out that middleman, that we could reduce the price of training by about 90%. And so for us, I think it was a matter of principle. We've always enjoyed providing training, and we also have a belief that it doesn't have to cost you a lot of money to do training. In fact, if you're spending more money on your training than you're spending on your investing, then there's something wrong. And so that's been a firm part of our belief system, and it's something that we still operate with today. We want to make this affordable for people, but at the same time, we also want people to be successful with it. So some of the topics we'll cover tonight, we're going to talk about the property tax cycle, liens, deeds, redemption deeds. We're going to talk about some of the different ways that are sold, as in live auctions, online auctions, over-the-counter investing. We're going to talk about also bank-owned liens and deeds. So we've got a ton of information to cover, but like we said, feel free to ask questions here at any point, because I think it only makes it better.
Yeah, absolutely. The questions just help the conversation. As we're going through these different topics, if you have different questions, go ahead and ask, and we'll try to address as many of them as we can. And if there's any questions we're not able to get to, we'll go ahead and, we can answer any of those questions after.
Yeah. Now, there are certain fundamental things you need to understand, I think, in order to grasp how all of tax sales work. It's kind of like math concepts, where in order to understand certain concepts down the road, you need to understand certain fundamentals. And it's the exact same way with tax sales. One of those things you need to understand fairly well is how property taxes work. You need to really understand. The more you understand about property taxation, the more the investment will make sense no matter where you're at. So most people have some idea of how this works, but we like to put it out there in very plain terms so that you can see exactly how the system works. So when we're talking about the property tax cycle, each of us lives in a place that has if you're living here in the United States, you have a federal government, you have a local government, and that local government is responsible for providing a lot of the services that you see about you every day, along with things like education and police, fire departments, and a lot of the services that you would attribute to government are actually provided on a local level. Okay, and the way that happens is through the payment of property taxes. We essentially pay the county, and the county uses those funds to pay for these ongoing services. So it is a system where the county relies on the property owners within those county boundaries to pay for those services. So the question that comes up is, what happens if somebody doesn't pay their property taxes, and what exactly can the county do in order to try to collect that money? In other words, what enforcement systems or measures are in place? Because obviously there's something in place, or else nobody would pay their property taxes. So that's part of what this is about, is the normal property tax cycle and what happens if we disrupt that or somebody disrupts that by not paying their property taxes and how the county handles that. Now, yeah, the reality, I think, of taxes in general is that there has to be some kind of repercussion or else nobody would pay it. That's part of the reason why a tax is a tax. And they get that power through state laws. So we know that the federal government has laws. We also know that each state government has laws. Now, this also goes to explain why tax liens and deeds have been confusing for years. Why they're not more popular. Why they've always been kind of a buzzword with investors, but people haven't really understood them. Um, the state laws for each state are different. And that's why certain things are, that's why you can go to Las Vegas to gamble, and why, it's not legal in the next state. Well, those same types of state laws also grant governments, local governments, the power to collect a property tax. It's also why it's been so confusing, is because there were 50 different sets of rules on how tax sales were to be conducted. And so you couldn't just learn it in one place. It was confusing because you found, if you just moved over to the next state, it could be a completely different system. And that was one of the things we set out in the beginning to try to tackle and simplify and make it easy for people to understand.
Yeah, absolutely. And just kind of a quick point to add, this is something that has been around for hundreds of years. And so the tax sale system and the way that this works is not something new. In fact, one of Wyatt Earp's jobs back in Tombstone was to collect property taxes, and if people didn't pay their property taxes, then essentially they auctioned off their farm or auctioned off their land or whatever it was. And so this is something that has been used for literally hundreds of years, and this is the way that county governments have been able to really collect their property taxes.
Yeah, in fact, they really came up with a pretty ingenious system. The way the tax sale systems work with local governments, I think, is ingenious because it fixes so many problems and it doesn't create any new issues. Really, they're pretty fascinating in that way. But the tax sale system and our property taxes enable the county to provide all of those services. And keep in mind that when we're talking about schools, police, fire, a lot of the things, schools will suck up a huge portion of the budget for a lot of counties. They have ongoing expenses. And the reality of it is, if they don't collect as much money as they think they're going to collect, and they have a budget deficit, they have to borrow that money. And that money that they borrow is very expensive. And they pass that expense on to the property owner the next year in the form of higher property tax rates. So it really works to everybody's advantage for this system to work. And the system is all about recovering delinquent taxes. But at the same time, though, they recover delinquent property taxes by creating an investment opportunity. Also, we're going to talk about tax liens here, but something else that you need to understand, I think, is just the basics on a property tax bill. How do they come up with the amount that they're going to charge you? What is that based on? And if you own property, then this may be something you already know and you've already dealt with for years, but property tax rates, or the amount that they're going to tax you every year, is not a random number. It's based on an exact budget that the county is trying to raise. And it does that through the collection of property taxes. So essentially what the county has in terms of information is they know how much money they need to raise for their budget, and they know how much real estate they have within the county. They know what the value of all the real estate is because they have an assessed value for all of it. And using those two numbers, they can come up with the annual tax rate that will help them to reach that budget expectation. So it is very specific in the amounts that they expect to collect. Which brings us to a tax lien. What exactly are we talking about? If you want, Steve, you can explain to them kind of the basics here of what exactly a lien is and how it works.
Yeah, exactly. Tax liens are one of the buzzwords that have been used for years. And really, what is a tax lien? Well, a lien is a legal claim that's placed against a property by a government taxing authority due to delinquent property taxes. So that's really what a tax lien is it's a claim, it's a lien that they place on that property that doesn't allow you to do anything. So that lien is a first position lien, which means it takes priority over everything else, including a mortgage, judgments, anything like that. The lien's going to be the most important thing. The lien's what's going to need to be paid off before that property owner can do anything. So if they have that lien placed against their property, they can't refinance the property, they can't sell the property until that lien has been paid and clear. And so each lien is going to be given a couple of different things. First, it's going to be given a redemption period. Now, what this redemption period is essentially the time frame that the owner has to pay you back, to pay back that tax lien certificate. In addition to the redemption period, you're also going to have an interest rate return. So this is what the investment part comes into tax lien certificates, is essentially you're going to be earning that interest rate return on your money. Now, what that tax lien also has is going to have a foreclosure right, which means if the property owner doesn't pay you back the money that's owed during that redemption period, then you're able to foreclose on the property and take ownership. And so that's really the power of tax lien certificates. 95% of tax liens are always going to redeem. They're going to pay you back and you're going to make your money and your interest. So essentially what makes them so lucrative is that most tax liens are going to earn double-digit returns. So we're looking at returns of anywhere between 10, 18, 25%, 24% for tax lien certificates. So it has a real good opportunity to not only earn money, but that tax lien is going to be essentially guaranteed. The property is acting as collateral for the lien. So that lien is an incredibly safe investment. And not only that, you know exactly how much you're going to be earning before you invest in the tax lien certificate.
Yeah, in fact, we'll be able to kind of show you some of these because it can be a little bit confusing, I think, when you're first trying to figure it all out. When Steve and I originally were looking at all the different states, what we did was we started reading state laws about property tax enforcement and how exactly they did that. And what we realized was this, that there are essentially 3 tax sale systems that are used in the U.S., meaning that state laws will dictate one of these systems in all 50 states. In some states, there's a couple states, I guess, where they use actually more than one. But for the most part, though, you can think about it as each state, having one of these 3 systems. So we've got tax liens, tax deeds, and redemption deeds. Now, if we're talking about tax liens, like Steve said, there is an investment opportunity there, and which comes in the form of high interest rate returns. When a person's late with their property taxes, the county places a lien against the property. Now, what do we know about the lien? It prevents the transfer of ownership, so they can't sell it. We know that the lien has a redemption period. And in a way, it's like a grace period for the property owner. It's the time period that they have where they know that the property will not be foreclosed on. So it might be 2 years, it might be 3 years. It varies from state to state. But the property owner has that guaranteed time period before they are at any kind of risk of losing their property. And part of the reason why they did this was because they didn't want people losing property quickly. They wanted people to have the opportunity to pay it off. They didn't want the government to step in and take property quickly like they had done in many of the places that people had come from when immigrating to America. They wanted to have a different type of system. So that was, I think, why they came up with this. For the county, it's important to remember the county is only after one thing. They only care about one thing, and that is collecting the delinquent taxes that are owed. In fact, everything you'll see the county do is pretty much in an effort to ensure that that happens. The county places the lien against the property, but the whole purpose in placing the lien against the property is really about collecting the delinquent property taxes, and here's why. When they place that lien against the property, it gives them the opportunity to sell something. They can sell that lien to the public, to an investor, which gives them the ability to collect the money right away. So, the delinquent money that's owed, it doesn't necessarily matter how long it would take the property owner to pay off that amount because they can sell the lien at a tax sale and get that money right away. And so the county will hold a tax sale where they will offer up these liens. And as Steve mentioned before, liens pay out a set interest rate return. And it's not just an arbitrary interest rate, it's actually set in state law, which is something else that's incredible about tax sales. Tax liens specifically too is the level of security. So state laws will set out a maximum interest rate return you can earn on liens, and this draws investors because it's a high interest rate return, but also that lien is secured by the entire property. So even if a person only owes $1,000 in property taxes, that lien is still going to go up against the entire property, which means that your $1,000 investment into this tax lien is secured by a property that is most likely worth 50,000, 80,000, whatever the value is going to be far above what the amount is that you're paying. After you purchase the lien, so let's say the county holds the tax sale, an investor comes and buys this tax lien, let's say it has a 2-year redemption period, what happens is really dependent upon the property owner, and it's always going to be one of two scenarios. Now, one thing I wanted to just get across right now is that the most common thing that we have to try to correct with people when it comes to tax liens, so I mean, it's almost on a daily basis, but people have a misunderstanding about exactly what tax lien investing is and what it's for. Steve mentioned something important before, and that is that the vast majority, 95% of these liens redeem. Okay, that's how the system is supposed to work. They are supposed to redeem. So when you buy liens, it's not about trying to acquire property. When you buy liens, it's about the redemption. That's what's supposed to happen. It's about earning that high interest rate return. It's the reason why banks and large financial institutions have been investing in tax liens for many, many decades. It's because they make a killing on the interest rate returns with it. It's the safest investment that they can find and that they make a lot of money with. So, when you purchase, I guess after a tax lien is purchased, there are two scenarios, and they both depend on the property owner. And it really comes down to whether or not they pay the county what they owe in delinquent taxes or if they don't. If they pay the county what they owe in delinquent taxes, which is what happens the vast majority of the time, then the lien is removed from the property. When the county receives that check, what they're going to do is they will cut a check to the investor for their initial investment plus the interest rate they've earned up to that point. So, 18% annually. If it's been 6 months, they would earn half of that, which would be 9%. If it's gone for 2 full years at 18%, they would earn 36%, and so on. It accrues every month. So if it's 12%, it accrues at 1% a month. The other option is what happens if the property owner doesn't pay the delinquent property taxes off, and that redemption period comes to an end. This is where the security of tax lien lies. Because that lien is a first position lien, meaning it takes priority or precedence over any of those other liens, it means that when the redemption period ends, that lien has foreclosure power, and it can be used to foreclose on that entire property. So even if it was just a $1,000 tax lien and it's a $50,000 property, it doesn't matter. It can still be used to foreclose on that property. What happens if the person has a mortgage? Doesn't matter. They can still foreclose on the property because it's a first position lien. Now, normally that doesn't happen, with all those things. If somebody has a mortgage, it doesn't normally get foreclosed on because there are parties there that have an interest in the property and want to make sure that it doesn't get foreclosed on. But those two scenarios are essentially it. You're either going to get a check in the mail in terms of your initial investment plus your interest rate return, or you'll have the opportunity to acquire property. In other words, you'll either get that check in the mail or the redemption period expires and you can start the foreclosure process to acquire the property outright. Yeah, anything you want to add to it?
Yeah, I mean, really just with tax lien certificates, the the reason the county needs this money is they need it on a quicker basis, and that's the reason they created the tax lien system. And so with tax lien investing, this is really the safest investment. I mean, what I love about tax lien investing is you're not guessing. I mean, you're guessing maybe how long the lien is going to stay before you get paid back, but you know how much you're earning. And you can earn, if you purchase an over-the-counter tax lien certificate in Florida, earning 18% interest rate, you're earning 1.5% per month. People put, you know, millions and millions of dollars into savings accounts where they're not making 1.5% per year, let alone 1.5% per month. And that property is usually going to be worth, almost 100 times more than the tax lien certificate. So you're essentially, your investment is not only protected by state law, but it's also protected by the property itself. And so I don't know of any safer investment than tax lien certificates. You can compare it to stock or anything like that. You're not going to be able to earn the safety. You're not going to have the safety of tax lien certificates and also the high return of tax liens in any other kind of investment that I know of.
Yeah, I agree. Yeah, it's been nearly 20 years, and nobody's ever shown us something else that is better. Also, it's a real hands-off investment. After the tax lien investor buys that lien, they don't have to do anything. They just sit back and can essentially just wait for a check to come in the mail. And, they can simply reinvest the money after that. However, if that redemption period comes to an end and they still haven't received the money, then that, like we said before, that lien gives them the power to foreclose on the property. And that doesn't necessarily have to be a very difficult process either, depending on where you're at. What's important to remember is just that that lien does have the power to foreclose if the property owner hasn't paid. So in other words, if all else fails, you will foreclose on that property. But the majority of the time, people will pay it off before then. So remember that when you invest in liens, the primary objective there is to earn a high interest rate return on a really safe investment. Okay, and the vast majority of the time, that's exactly what happens. Other things that we could say about the interest rate return that you're paid. The okay, well, the state will set a maximum rate of return, but in some cases the county can have competitive bidding. So maybe they'll have the maximum bid for the state, the maximum interest rate return for the state might be 18%, and that's where they'll begin the bidding at if they use the interest rate as the bidding medium. So they'll whoever's willing to accept the lowest interest rate would be the winner of the property. That's one of the ways that they do it. Now, another thing is some states, like Florida, has an early payoff penalty for liens that redeem early. They're trying to offer incentives there to investors to ensure that they'll come there and invest. So they have an early payoff penalty, so they can basically say, hey, if this lien were to redeem too fast so that you really weren't earning any real interest rate return because it hasn't had enough time to accrue, we're going to give you at least this amount. And that's how that early payoff penalty works. And redemption periods, I think we've pretty well covered the redemption periods. I mean, they can last between 1 and 4 years, depending on where you're at. They
Yeah,
always begin. Oh yeah, go ahead.
the only other point was really the redemption periods start on the day of the sale. So once that sale happens, that's essentially when the redemption period starts. So if you're purchasing a tax lien that's over the counter, for example, that redemption period, let's say we purchased one in Florida, has a 2-year redemption period. If that tax lien's already a year and a half old, that means that essentially you can start the foreclosure process in 6 months from then. So, really that's when the redemption period is going to start, and just like Shade said, they're going to last anywhere between 1 to 4 years.
Yeah, in fact, if the idea of earning a high interest rate return like 18% sounds pretty appealing to you, then just wait for a minute. We'll tell you just how easy it is to earn that with over-the-counter investing, which means basically buying it directly from the county after the sale. It's so much easier to earn high interest rate returns than you might think it is, and also so much safer. But that's essentially how tax liens work. And again, they're there to help the county to help the county continue to function and to continue to provide those services, but they also create an incredible investment opportunity, and that's why they've always been a buzzword. That's why investors have always had some interest. It's because they would hear down the grapevine that banks or different financial institutions were buying them up, and they would buy these things up in bulk, buy lots and lots of liens because of that high interest rate return. But tax liens aren't the only system uh, out there. They're used in about a third of the states, roughly. There are the two other systems that we mentioned. There are the tax deed system and also the redemption deed tax sale system. So if you want, Steve, you can kind of explain to them how the tax deed system works and what separates it from lien states.
Yeah, absolutely. I mean, with tax certificates, essentially they're trying to get their money right then. With most of your tax deed states, they're willing to sit for a while and essentially they're collecting the interest. So they'll still charge penalties or interest rates against the property owner, but essentially that's coming in-house. And so what tax deed states do is they give the county the power to foreclose on the property after the redemption period is passed. So tax deed states will have a redemption period just like a tax lien state will. So here in Utah, it's a 5 year. California is 5 year. There's others that are 2 or 3 or 4 years. So once that redemption period is passed, the county has been sending out notices the entire time. And if the property owner hasn't taken action by that point, the county's just going to go ahead and foreclose that property. Now what they do is they foreclose and they create a tax deed or a quitclaim deed on the property. So they create a deed for the property. And then what they do is they offer that deed at the public auction, starting at the delinquent taxes, penalties, and fees. So if it's been a period of 3 years and they owe $1,000 a month, it'll probably be $3,000 in delinquent taxes and maybe $300 or $400, $500 in fees. So that opening bid is going to be $3,500. That's where essentially the bidding starts. And so essentially when you're purchasing a tax deed, that's where you're actually acquiring the property. You will receive the property. And once the sale has been completed and you receive that tax deed, now you have ownership to the property. So what a tax deed is it's just a tax foreclosure. You know, we hear about foreclosures all the time, and most of the ones that people talk about are essentially mortgage foreclosures, where, you know, they're being offered at the county courthouse. Tax deeds are the same way, except for the difference is a tax deed is going to start at a lot lower opening bid, and you have a chance to buy this property at a lot cheaper price. In addition with that, tax deeds eliminate any other encumbrances on the property. So if there's a mortgage, if there's you know, different if there's a mortgage or any other types of claims against the property, judgment, those are going to be wiped out through the foreclosure. That's really what makes tax deed foreclosures the best investment opportunity, is that you're going to clear out any problems on the property once that tax deed has been issued and you purchase it at the sale.
Yeah, in fact, I think it's a really good point that when people think of foreclosure, so if we mention the word foreclosure, what's most likely going to come to mind is a bank foreclosure. And reality is that's not a true foreclosure in a sense of the word. It is a bank foreclosure is a little bit different. And what we mean by that is when a county forecloses on a property due to delinquent property taxes, or if you had a lien that you were foreclosing on because of delinquent property taxes, we mentioned that lien is a first position lien, and that it takes priority over other liens or claims. Well, foreclosing on a property in a tax deed state has the same effect and power. That foreclosure has precedence or power over any other type of claim. And so what it means, it's a judicial foreclosure. It's one through the courts. Bank foreclosures aren't done through the courts. Bank foreclosures are done just through the bank, and the only reason why they have the power to do that is because you sign away your right to a judicial foreclosure when you sign your mortgage lease. I mean, your mortgage contract. So that's why you don't go through a standard judicial foreclosure process, and that's because the lenders don't want the foreclosure to take that long. They want to be able to do it quickly. So they basically put some terms in the contract that say if you don't pay this by this date, and this by this date, that we can foreclose on your property relatively quickly. But there's never actually any transfer of ownership when that happens. Okay, the person may be losing the property, but ultimately it was still the lender that owned the property in the first place. It's not really anything that was attached to the property before. It's still there. Okay, if the person had something, some kind of lien against the property, it's still going to be existent there. It really doesn't get wiped out unless it gets paid off. But with the foreclosure that they go through for a tax deed is totally different with that judicial foreclosure. And what happens when the county forecloses on that property and are able to turn around and sell that is the cheapest way to buy real estate, period. In fact, we guarantee this. There is no other way that you are going to find real estate for a lower price than you'll find it through tax sales, and with tax deeds even specifically. And the reason for that is because of the nature of the county and the position, I guess, they have with the property. What I mean by that is when the bank holds a foreclosure sale, so maybe the bank is trying to sell off some of their foreclosures, and investors are thinking, hey, this is a good way I can buy property for less. Well, the bank may offer those properties for a bit of a discount, but the bank is still the owner of the property, and they still are going to limit how much money they lose, because any money that they don't collect is just money out of their pocket. So maybe they give a 10% discount on it. Maybe you got really lucky at 20% discount, but most of the time it's probably going to be less than that. With a tax deed and a true foreclosure, the difference is that the opening bid amount will be what's owed in taxes and fees, and beyond that, the county does not care. It makes no difference to them what it sells for. In fact, they don't keep the money if it sells for more. So if there's $10,000 in taxes and fees owed and it sells for $15,000, they don't do anything with that other $5,000 that's not theirs. They put it back on the books. It's what we call overages or excess proceeds. So the only thing they're interested in is that amount that's owed to them, and they initially get that as soon as it gets an initial bid. Okay, so the tax deed system, I think, is a little bit slower because, like Steve said, it takes more time. They don't issue liens. They just have one redemption period, or I guess if they do issue liens, they don't sell them. But for the most part, they just have a redemption period that they wait out, and it can be upwards of 3 to 5 years, in many cases 2 to 5 years. But at the end of it, they sell a property at auction as a tax deed, which investors can show up and buy, and we guarantee will be the cheapest way that you can buy real estate. So when we talk with people that want to invest in real estate, if they're looking at a buy and flip strategy, or basically a buy and sell, they're looking to buy low, sell high strategy, then tax deeds really make the most sense. If a person wants to do that and they're talking tax liens, we have to kind of steer them away from tax liens and say, okay, if you want property, let's go this direction, because ultimately, if you want property, can you get property through a tax lien? Yes, you can get property through a tax lien, but the majority of the time they just redeem. If you want property, it's so much easier just to start out right there at a sell that is offering property outright, which is exactly what a tax deed sell is. So if you show up there, you are buying the properties outright, and like Steve said, it's a form of a deed. It's like a quitclaim deed. Tax deeds are. They convey ownership, but it's simply it's a simple form. It's a simple type of deed for the county to create following a tax sale. Is a tax deed. So they sell off these deeds to the investors. And keep in mind, for the county, one of the advantages of doing this, the county doesn't want to take property away from anybody. You'll find that the counties are reluctant to do it. They try to give property owners any chance they can. But if somebody's not going to pay the property taxes over the period of years, okay, so if it's been multiple years, many years since that property has had any kind of property taxes paid, it's really not fair to the other property owners in the county. And they need to have a property owner that owns that property that will pay the property taxes. And that's one of their benefits of being able to sell it, is to get somebody else that owns it that can that that will start to pay the property taxes rather than them being so delinquent on them.
Yeah, I mean, really, tax deeds are such a great way to acquire property. I mean, there's really not a better way that you can go out there and purchase property all across the country for a lower price. When we're looking at tax deeds, we're essentially looking to pay anywhere between 10 to 50% for the property, depending on how competitive it is. In fact, we can look at other tax deeds where we can even get it for less than that. Maybe anywhere between 5 to 10% of the property's value. So even if you just turn around and wholesale it, you could still make a huge profit. I mean, you purchase a $100,000 property just using that number, and you pick it up for 5 or 10 grand. Even if you sold it for 30 grand, you're still making an incredible profit, and you can flip it on to somebody else who's going to fix it up or do whatever they want to do with it.
Yeah, in fact, yeah, with tax deeds, that's where you'll find crazy opportunities with things like homes for $5,000 or $10,000, um, and deals like that. I mean, for Steve and I, what really catches our attention when we're looking at properties is if we can find tax deeds that are about 10% of, if we can find a tax deed that can be purchased for about 10% of its value. And if it goes beyond, above that, I mean, like he said, there are deeds that are more than that, maybe 20% or 30%, but you will never find another form of real estate investing that allows you to buy property this cheap, just because it's the only system that's where the person selling the property doesn't have a personal interest in what it sells for. That's really what it comes down to. They don't have a personal interest because they're not losing that money on it, so they'll sell it for whatever, and that's why it's so good. But there is a third system that we mentioned, the redemption deeds, which are available in it's probably not quite a third of states, but it is something that's relatively common. Do you want, Steve, you can kind of explain redemption deeds. I think you do a pretty good job of explaining it.
Yeah, absolutely. I mean, really, the term redemption deed was a term that me and Shade created uh, in maybe around 2003, 2004. And it's actually been adopted by a lot of the industry, and a lot of the training companies now call them redemption deeds. But before that, they were called hybrids, or there was random names for them. But really, what a redemption deed is similar to a tax lien and a tax deed. There really are a hybrid of both. Redemption deeds are tax deeds that are given with a redemption period. So when you're purchasing that property, you're actually receiving the deed, but the deed's not going to be recorded with the county, or you're not going to have full ownership until that redemption period has expired. Now, they can range anywhere from 2 months up to 2 years, depending on the state. Now, with redemption deeds, in some states, um, they also offer some ownership rights. For example, Texas is a good state to use. In Texas, when you invest in one of these redemption deeds, you can actually rent the property. You can live in the property. You're going to have ownership to that property during that redemption period, but the property owner is going to have a certain time frame to pay you back that money. So usually redemption deeds are going to be a shorter period of time. They're going to usually be anywhere from 6 months to a year, where you're going to be waiting, and the property owner has that right to pay you back. Now, what makes redemption deeds nice is if the property does have to pay you back, or the property owner does pay you back, they offer a penalty return versus an interest rate return. So in Texas, let's say you purchase some type of rental property there. It has a 6-month redemption period. Within that 6 months, you're either going to have full ownership of the property, and then during that time, you'll also have ownership rights. But if the property owner does pay you back, let's say you purchase it on a Tuesday and they pay you back on a Wednesday, they're going to have to pay you that full 25% return, which is the interest rate in Texas. In Georgia, it's 20%. But essentially, they're going to have to pay you back that full 25% to be able to acquire the property. Now, with redemption deeds, unlike a tax lien, you're going to have a lot higher chance of actually owning the property. So with a tax lien, maybe you're owning it 5% of the time. With redemption deeds, you're usually, I would say more than 50% of the time you're going to get the property. Most times you're going to get the property because at that point it's really almost sold as a tax deed. So what these redemption deed states have done is they're selling the tax deed, but they're saying, okay, we're going to let the property owner get the property back within this shorter time frame. But if they do, they're going to have to pay you a hefty return. So that's kind of how redemption deeds work. They're really kind of a combination of both a tax lien certificate and uh, a tax deed.
Yeah, you can kind of get a sense just as we explain these three different systems of why it's been so confusing. If you figured that each state was randomly using one of these three systems, but there was no central system or central way of explaining how it all worked. Everybody just kind of did their own thing. Um, yeah, I think one of the things to kind of look at redemption deeds with is that at this point the property owner has already lost the property. To foreclosure, and I think that's why, as Steve mentioned, they have a higher chance of resulting overall in foreclosure rather than redeeming. And that is, they do want to give the property owner that chance to pay it off. But if you think about it, if the property owner couldn't pay it off prior to the foreclosure, then what are the chances that the property owner is going to be able to pay it off after the foreclosure, and there's an additional 25% added on top of it, 25% penalty, just a flat rate, which is part of the reason why they're so good, because that flat rate, it doesn't accrue with time. It's just simply flat 25% that they give out to you. If in Texas specifically, if a property is a homestead property, meaning that it's like owner-occupied type property, then those have a 2-year redemption period on them, and the penalty rate's 25% annually. So what's interesting about that is you'll earn 25% if it redeems anytime in that first year, but on the first day of the second year, you can add another 25% on top of that. So it could redeem, let's say 1 year, a year and a month after you bought it, and you will get 50% return on your money if it redeems. They do that because I think they want to make it worth it to the investor, even if it does redeem. So, and at 50%, it would certainly be worth it. At 25%, it would certainly be worth it if it redeemed. That wouldn't be a bad thing if you lost a property but made that quick 25%.
Yeah, and one thing I forgot to mention about redemption deeds is I forgot what I was going to mention.
It's okay. If it comes back there, you can cut in here.
Yeah, yeah.
All right. So one of the questions that it's important for people to ask in the beginning, and something we always encourage people to do, we want people to understand exactly what their investment strategy is, and we've gone through a lot of work to help outline exactly how different investment strategies can work with tax sale investing. But one of the first questions you have to ask yourself is whether you're looking for yield versus ownership. What we're talking about there is, are you looking to earn the highest interest rate possible on a very safe investment, or are you looking to acquire property? That's something to think about. And a lot of it comes down to the type of money that you're investing and what you're looking to do with it. When you look at investing in tax liens for yield, think about that like you would almost like a retirement account. Okay, I don't know how much your 401k or your IRA is earning for you right now, but the idea with this is that same type of long-term investment for high interest rate returns. Okay, it does tend to take more time though. This is something that's based on time, so the longer the duration, the better, because you're earning a high interest rate return during that time. But if instead of trying to invest that type of money, like retirement money, you're looking to take a set amount, like let's say somebody says, I've got 20,000 and I need to try to turn this into something more than this. I want to use this as my starting capital here for starting off my investing. Then you need a faster vehicle for building that up. You need a buy and sell strategy, which would require ownership. And that would enable you to sell the property for lump sum returns, or you can turn it into regular income by rental or by owner financing, that type of thing. It's more time intensive because you are actually acquiring property. So there's typically more money involved per investment, and there is because you're actually acquiring property versus just buying the lien. There's a higher degree of risk, you could say, and so you want to put more time into it to ensure that you're buying the right type of property, and you understand everything about it.
You know, I just to kind of remember that point that I forgot. Essentially, with redemption deeds, and I think it's an important point. And that's really the reason I kind of want to bring it up, even though we've passed that. Is with the redemption deeds, you're going to be actually bidding up the price in most of those states. So if the opening bid starts at 10,000, it's going to be sold like a tax deed. So the chances of you having ownership are going to be high because if it starts at 10,000 and sells for 20,000, chances of the property owner paying that back are going to be fairly slim because that property is already now kind of doubled in price because it's been bid up an additional $10,000 at the auction.
Yeah, I think that's a good point. There are what's interesting about tax sales is because you've got 50 different sets of state laws that dictate how it happens. Um, you have a pretty wide variety of counties and how they go about doing it, and uh, it's interesting to see just that huge wide variety in how they do that with these three systems. Um, Another question is that you're going to ask yourself here is which way? Whoops, sorry. There are multiple ways that you can buy uh, tax liens and tax deeds. It's a very diverse investment strategy. I mean, you'll if you haven't picked that up yet already, then you'll certainly begin to realize that the more and more we talk about it, that you can invest for interest rate returns, you can invest to acquire property, and beyond that, there's lots of different ways that you can buy these things. So it doesn't just have to be at some kind of an auction or something like that. There are many methods here, and they're only getting better. Um, and also, let me see here. We have a couple questions here. I want to make sure we're answering those. Yes. Now, one of the questions here is, do you have a list of the counties that have redemption deeds? Uh, and yes, we absolutely do. In fact, what we did when we divided states up, we figured out that there were those three systems. The tax liens, tax deeds, and redemption deeds, and we split them up, the states up, and created state guides, or what we call them. And that is where we went through the state laws for each state and tried to describe them in layman's terms, just in simple terms, how the state operates and what important things there are to know about that state. And so it's included in the state manuals, which are on the website. You can see it on the website, or you can also download the materials. All the members can download the training program, the tax lien training program that has the 5 manuals. One of those manuals is a redemption deed manual. And so it will give you a list of the states. It'll describe how those states operate, and also the counties within those states.
Yeah, and one thing as well, most of you have probably downloaded our ebook, Secrets of Tax Lien Investing, off the website, the free ebook, and we have kind of a broken down version in there as well. Won't have as much information as we do on our full profiles, but they're going to have a list of each state and how those states run within the second book on that two book series, Secrets of Tax Lien Investing, that most of you probably downloaded for free off the website. It's probably part of the reason you're here today.
Yeah. Another question we have here is about the bidding up. And the person's wondering, they said, I thought if they made more money, they have to give it to the original homeowner. And that's true. That's absolutely true. If they sell the property, so let's say a property opens up, their opening bid is 10,000. That's all that is really owed to the county. The county's not going to take anything beyond that for themselves. But if they sell it for more than that, so if there's an overage there or excess proceeds, then they will put that on the books, and the person that would get that would be the original homeowner, or whoever is listed as the homeowner then would get the excess amount from that. And so they don't keep that, and that's actually part of one of the strategies that people can use. It's kind of one of the side strategies for tax sale investing is with overages, and that is helping people get connected, helping the owners that are owed that money get that money, that's still on the books with the county. And so, yes, the county is still going to keep that money for the property owner. They are really strict with that. In fact, you can go back and look on their records uh, of previous sales, and they still have all of that money on the books, and will pay that to the owner when they if they apply for it. Um, so as we were saying, there are different buying methods here. What we have listed here are live auctions, online auctions, over the counter, and bank owned. Um, each one of those is a different buying method, and each one, I think, offers advantages and disadvantages. In other words, uh, what may not, if one of these may not be good for you, you may find that something else is, because there's so many different ways that you can buy. So part of this is just trying to determine which one is most appealing to you. The live auctions are the oldest way that counties do this. They've been holding live auctions for a long time. I mean, we're talking in excess of 100 years. Counties have essentially been holding their tax sales the same way they've been doing it for a long time. And in fact, before the internet came around, nothing about tax sale investing really changed much for a long time. Counties would hold their sales as live auctions. They would advertise their sales in a local newspaper, like in the legal section of the classifieds, and they would rely on local investors to show up and to buy. So this is the most common thing. It's still, even today, it's still the most common method for tax sales, but it's changing. Obviously, the biggest problem with a live on-site auction is the travel limitations, which means means that you have to be there in order to bid on the property, which means they're going to have a limited number of people. They can only get so many people to actually show up there at the auction in order to do that. So the advantages, disadvantages, one of the advantages are because it's difficult for people to be there, because they can only have so many people there to live auction, it tends to limit the competition. It doesn't mean every live auction is not going to have competition, but it tends to limit the competition more than, let's say, something like an online auction, where it's much easier for a broader base of people to participate in it. But live auctions are an experience that every investor should go through and should be able to experience, watch, and learn from, because they are incredibly valuable for just the learning you get from it alone.
Yeah, absolutely. And with live auctions, one thing we always recommend is for every investor, there's a live auction taking place somewhere within your state within the next year. And we would recommend every investor go to a live auction, because going to an auction is an education experience of itself. I mean, going to an auction is, in some ways, at least going to some of these seminars out there is better than going to one of those seminars, because you're going to see actual bidding take place. You're going to see people bidding on different properties. And so even if you don't plan on investing, let's say you're a taxing investor and you don't plan on investing in tax deeds, it's worth it to go to the auction, because it's going to give you a chance to really see how it works in live person, being there and being able to see how the auction works.
Yeah, in fact, when we started with it, when Steve and I originally started, we were trying to learn about tax sales from any way we could. I mean, it was so intriguing, the investment, but it was difficult to find information about it at the time. And that was probably what almost taught us more than anything, was just attending auctions. We just started attending auctions because we didn't understand, and we thought it might be a good way to learn, and it was. So,
Yeah,
we always
in
encourage
fact,
people to buy.
yeah, when we first started attending auctions, in fact, we didn't even invest. We didn't even have money to invest at that time. We were going to the auction only for the reason of the education, seeing how it works. And that's where we learned about certain things like emotional bidding and setting your bid amounts. And that's kind of how we develop some of our strategies, is by attending these live auctions in person.
Yeah, they're incredibly valuable, and yeah, you do have that added benefit of having limited competition. if you have live auctions taking place somewhere near you for one of these sales, there could be more opportunity there than you'll find in many places. It's not unusual for counties to have far more property available than they have investors there to buy it. And that's the exact kind of situation you want, because it means that the money in the room is going to run out relatively quickly, that you can buy stuff for close to the opening bid amount, and that there's not a whole lot of not as much competitive bidding to drive up prices. That's exactly what you want, because it means you're going to have high profits. But online auctions were something that were brand new when we first started. When we first started getting involved, there were a couple of counties in Florida that had just started doing online auctions. And Florida's always been at kind of the forefront of tax sale investing. Even before they were doing online auctions, they were the ones that were selling huge amounts of liens to these big institutions. They would sell their entire tax sale portfolio to banks or different financial institutions. So they've always kind of been ahead in that way. But online auctions were a game changer. Really, there were probably two things related to the internet that changed everything about tax sale investing. The first one was online property records and record search tools. That changed everything, because prior to online records, if you wanted to find the information on the property, the only way you could do that was from a county records building. So you were very limited in your ability to conduct even due diligence because the records were just not available. But county records, when they came online, meant that you could do the same amount of work within just a couple of clicks. It changed everything about it, made it so much easier to pull up information about the property. Online auctions are the other thing that really changed everything, because you were no longer limited by location. You could invest from home. You could invest from the internet. And what we've seen since then has just been the number of online auctions going up every single year. In fact, for many years, it would like double every year, the number of online auctions that were available. And so online auctions have become a fantastic way. They're only getting to be more and more popular. Now, let's see here. Let's talk about in terms of online auction systems. Yeah, if you want, Steve, I guess you can talk to them about some of the online auction providers or how counties are doing it here. Or I'll go ahead and do it here. You're probably still on mute.
Yep, I
So,
was on mute. I was on mute. Just talking away. So as far as online auctions, they're handled by the county, but there's several different companies out there that have developed software and websites that essentially replace these auctions. So there's realauction.com, there's Grant Street Group, there's Bid for Assets. There's all these different companies that essentially are providing the platform for counties to offer their properties online. And the reason a lot of counties are doing this is not only to increase the competition, allow more people to purchase the properties, but it's also cheaper for them many times to be able to just use one of these systems to be able to do it. And so we see just more and more counties moving to online auctions. In fact, we're constantly searching for new auctions, and we'll always put them up on the website once we find them, because it's something that probably on I would say every month there's at least one county or a municipality that's offering an auction online that wasn't there the time before. So it's something that is continually adding as counties are moving to these online auctions. So essentially, as we mentioned, there's several different companies, and the really big companies are going to be Real Auction, Grant Street Group, Bid for Assets, and also SRA Auctions does a lot of tax lien auctions as well.
yeah, yeah. What ends up happening with a lot of states is that one or two counties will start off doing online auctions, and eventually more counties will go with that same company until you have most of the counties in the state, or many of the counties in the state, that will go with that same company. So the companies tend to operate in different states. So for instance, Bid for Assets tends to you'll see more auctions there for California sales in Washington, and thinking about others here,
Really,
California, Washington.
Yeah, and those are going to be the big ones. They do Idaho and they've done Oregon as well and Michigan in the past as well. But they're usually bid for assets is only really going to do tax deeds, so they're not going to do tax lien certificates. Really, for tax liens, Real Auction and Grant Street Group, they're kind of the big boys as far as tax liens, and they're really competing against each other. So they'll have Florida and Arizona. And some of those different areas, and they are very similar and they kind of compete against each other. So Real Auction and Grant Street is where you're going to do a lot of tax lien investing, but they also do deeds as well. Both Grant Street and Real Auction do tax deeds in Florida, and Grant Street does it in California as well. They have a couple of counties in California. So these are those three are the ones that you're going to use the most. SRI Auctions has created a new system and a new kind of a new platform for online auctions, and they've actually got some Florida and Colorado as well as Real Auction.
Yeah, it's also a good example of capitalism and the way that it works there with their competition. They are trying to make it easier and easier for people to invest. So they're making the information more accessible. They're making the lists easier to read and to pull up. Everything about the investment has just become easier. And that's really the crazy part about it, is that it's only gotten easier. And I wouldn't say that it's necessarily that much more popular now than it was 10 years ago. Um, there is still a lot of opportunity there. I mean, you can still run into competition at different sales depending on where you're at, but at the same time, there are also still lots of sales that take place that don't have a lot of competition, and lots of property that still will sell for close to that opening bid amount. Um, and so uh, participating in an online auction is just as simple as registering for it, getting a deposit placed on the auction, and then essentially doing your research to determine what it is that you want to, which properties you want to bid on. But not everybody wants to deal with an auction. Not everybody is interested in auctions or likes the idea of competing in an auction. And the good news is you don't have to do it that way. As we said before, there's another buying option that enables you to go directly to the county, and it's what we call over the counter. Um, Other counties may have terms for it, like county held certificates. Sometimes they'll say county held property or county held certificates, or assignment purchasing, sometimes they'll call it. Over the counter is a term that some will use, but essentially what we mean when we say that is any tax lien or tax deed that you can buy directly from the county after the sale, is what it really comes down to. And what's important, I think, about over the counter is to realize that it's not unusual for counties to have far more liens or deeds available than they have investors there to buy. In fact, in some cases, it's almost comical how much property the county has available to offer. And so for the county, if they don't sell a lien at the auction, it doesn't do them any good. If they can't collect that money right away, then it just, the lien, I mean, the delinquent taxes are still owed. And what they do is they may put the lien back on the books, but they'll allow the public to buy it directly. So you can buy the tax lien. You can basically look at what they have still left over from the sale, and you can buy any of those just by making payment arrangements with the county. But one of the huge advantages for that is because you're not competing with somebody else to buy it, you'll earn the maximum rate of return in that state as the default. So like for instance, you buy any kind of an over-the-counter tax lien in Florida and you're going to earn 18% on it. And again, this isn't difficult to do. Buying over-the-counter tax liens in Florida is easy. It's really easy. In fact, it's incredibly easy to earn that 18% rate of return on it. But there are other advantages as well. For instance, Steve mentioned before the redemption period beginning on the date of the sale. That's important. It's important to remember that the redemption period starts on that date of the sale, even if the tax lien doesn't sell at auction. And why that's important is it can go and sit back on the books, but that redemption period is still ticking away. So if the lien was offered and it sits on the books for a year, and there is a 2-year redemption period, and you could buy it at that point and only have to wait for a year before you could pursue foreclosure. There are even some liens that you can buy that are right up at the redemption period or past the redemption period, meaning that they're eligible for foreclosure immediately after buying it, or within 3 months after buying it, you can initiate that foreclosure process. So whether we're talking about tax liens or tax deeds, there are some incredible opportunities with over-the-counter investing for those that don't want the sale and that don't mind doing a little bit of research and footwork, because uh, oftentimes some of these will be left over. And, well, I guess they're all left over, but what we mean by that is counties will hold these sales, they'll have these leftover properties, and you sometimes will get a large list of these properties. And so it can take a little bit of research and due diligence to search through them to try to find the best properties available, within those lists. But what's nice though is you're not competing against somebody on some kind of a time frame, so you can kind of take your time and gather all the facts. So if you want, Steve, you can go ahead and talk about just some of those advantages. I know we've kind of mentioned him here, but we can just reiterate what they are.
Yeah, I mean, really, the advantages of over-the-counter investing are huge. In fact, in this year, me and Shade are really focusing on over-the-counter deeds, and there's thousands of these tax liens and tax deeds available all across the country on every type of property you can imagine, from valuable land to valuable building lots to even single-family homes and commercial property. In fact, just this week, me and Shade have found two commercial properties that we're looking at, and a couple of single-family homes as well, and also many building lots just through these over-the-counters. And so we're going to be picking these tax deeds up for just the delinquent taxes owed. So as far as the advantages, I mean, you're not going to have to travel. You're able to do all of this research online. We're purchasing properties, on the other side of the country from where we live, through these over-the-counter lists, and we're able to do all of the research through or at least most of the research on any type of land property just through the online research. And so you're not going to be competing. There's going to be a massive selection, and there's different strategies you can utilize. So for example, if you're looking for tax lien investing, but you don't want to have to wait a year or 2 years before you get back your money, well, you could purchase a tax lien that's already past its redemption period, or will be redemption period in 3 to 6 months or something like that, or you can start the foreclosure process in 6 months, so you can get back your money in 3 to 6 months. And so there's just going to be so many different advantages. Really, it's just going to take a little bit of work going through and researching and identifying which properties are the best and which ones you want to avoid.
Yeah, think about how crazy it is that Steve and I are finding single-family homes, that we're finding commercial properties, that we're finding fantastic land and lots on over-the-counter lists. What that means when you're looking at over-the-counter lists, especially if we're talking about over-the-counter deeds. Over-the-counter deeds are incredible because you can buy those properties just for the amount that's owed in delinquent taxes and fees. You don't have to pay anything above that. And they're just sitting on the books. And sometimes these will be homes for homes for less than $5,000. You can find just incredible properties on these lists of over the counter if you're willing to spend a little bit of time looking for them. Some of the questions people ask though is why exactly. Oh, one of the questions here is, will you list the ones that are past the redemption period? And yeah, we can see if we can help with that. Also, we're going to talk about secondary liens or bank-owned liens, which if you're interested in liens that are past the redemption period, secondary liens are a pretty popular thing here that are brand new but are really handy. They basically just simplify the whole process and make it very easy. But one of the questions that people have is why wouldn't these, are these just the junk properties that were left over? Why didn't they sell at auction? And there are some different answers here for that. In some cases, sure, the sale has already happened and a lot of the properties may have been bought up. So a lot of the good opportunities may have been taken there initially, but not all of them. There's always going to be things that end up slipping through the cracks. But there could be a number of reasons why they end up on a list. It could be maybe it is junk property and that's why it's on the list. Or it could be that a sale fell through, or it could be that they didn't have enough bidders at the auction to buy everything that was there. Um, there are different reasons for that. You don't want to make the assumption that everything on the list is this or that, because you always have a mix. And part of what you're looking for when you're doing over-the-counter investing is you're looking for deeds, you're looking for that diamond in the rough. You're looking for that needle in the haystack that is very profitable. With liens, it's a little bit easier. It's not. I think investing in liens in general is kind of easy, just because the vast majority redeem. All you're really looking for is a lien against a good property that you think has good value, that you think has use. If the property has any kind of use and value, it's probably going to redeem. Oh yeah, go ahead.
I was just going to say, if it doesn't redeem, you're going to have the chance to pick up the property for just a small percentage. And so, with over-the-counter tax lien investing, just like Shade said, it's an incredibly easy investment. When we're talking about deeds, we're talking about property ownership. So we need to have exit strategies in place. We need to have, buyers, or we need to have a way that we're going to offer this property for sale and then go about offering it for sale. With tax liens, you can essentially find that property, and like Shade said, we always look for two things when we're looking at a property. We make sure the property has use, it's usable, and make sure it has value. And if it has use and value, then it's going to be a good investment.
Interesting. Yeah, one of the questions that we had here is it kind of leads us right into secondary liens or bank-owned liens. There's different terms for it here. But this is an investment strategy that didn't exist really just a few years back. And it's available now, and I think maybe one of the better ways to explain it here is that it has all of the benefits of tax liens, but without the time requirements, without the same work that's involved. And maybe where we could start with is this. We've already told you that banks and financial institutions have been buying these things for decades. Many decades they've been buying tax liens for these high interest rate returns and spending hundreds of millions of dollars on these liens. They buy them sometimes in bulk. They buy them in batches where they'll purchase just huge amounts of liens. And they buy them because they're a very hands-off investment. The banks are able to sit back and wait for those liens to redeem. They just basically sit back and collect checks in the mail. Now, for tax liens, as we know, the majority of tax liens are going to redeem, but it doesn't necessarily mean that all of them are going to redeem right away. There are some people that may need to have the threat of foreclosure before they'll actually pay off property taxes. You'll find with the redemption of tax liens, they happen throughout the time period. We've had liens that will redeem fast. We have liens that will redeem very last second and everywhere in between. So what ends up happening with these banks, and the reason why this opportunity is available now, is banks are only interested in one thing. They're kind of like the counties. Banks are only interested in earning high interest rate returns on safe investments. That's all they care about, is the easy money. They want the easy money. They don't want to have to do anything extra for it other than just buy it and sit and wait on it. And for a lot of the tax liens they buy, that works great for them. They can just kind of sit back. However, there are liens that you have to take action with in order to get the liens to redeem. And the county, if they were being, these banks, if they're being honest, will come out and tell you they have no interest in property acquisition. It might sound kind of crazy. It's like, hey, if you can acquire the property, why not? But they have no interest in it. They do not want to own property. All they really want is just to earn the interest rate returns. And so the banks will end up having some of these liens that haven't redeemed yet. And the banks haven't done anything to take any kind of action on it. And what will happen is once the redemption period comes to an end, with the lien, if it hasn't redeemed, then you need to pursue foreclosure, because that's what will ensure that the lien either redeems and you get your money back, or you foreclose on the property. But that's how you determine and make sure that something happens. Well, what banks will do is they will sell their liens that haven't redeemed yet uh, to investors. We have a portfolio manager and some relationships developed with these banks that enable us to purchase these secondary liens from their inventory. Okay, and we can purchase these liens that are what's called foreclosure ready. They are liens that the bank has sat on for a long time to the point where the redemption period has come to an end, meaning that the lien can be foreclosed on immediately. Okay. The advantage of this is that it enables you to control the time frame of the investment. So normally, if you were to buy a lien and it had a 3-year redemption period on it, you could be waiting up to 3.5 years possibly before you see your return on your investment, meaning that it could go right up until the end of the redemption period, and then even as you're trying to foreclose on the property. That is what's possible. When you buy a lien that's foreclosure ready, what it does is it enables you to initiate that foreclosure process immediately and guarantee that there will be some kind of resolution within, let's say, 6 months. So, once you start that process, you know that it's going to take roughly within 6 months. You're either going to own the property through foreclosure or it will have redeemed. But that's one of the advantages of these, is that they enable you to control that time period. If you want, Steve, you can tell us a little bit more about some of the other advantages of secondary liens.
Yeah, I mean, really, the advantage of secondary liens, like Shade said, and I guess the biggest advantage is first of all, we've already gone through these tax lien certificates. So with these secondary liens, these are liens that we've already or will purchase ourselves, and so with these are liens that we've already gone through, and we've determined that these are going to be good investments. Now, once you purchase that tax lien certificate, your portfolio manager is going to help you do the foreclosure process. So depending on your strategy, if your strategy is just to sit back and wait, then we'll be able to help you purchase tax liens to be able to do that. But a lot of investors want to be able to flip that investment over as quickly as possible. So, that way they can really kind of compound their interest. And so instead of waiting 2 years or 3 years to be able to essentially get their money back, with these secondary liens, we can go ahead and start that foreclosure process now. So if we do a lot of secondary lien investing in Florida, because of the ease to do the foreclosure. You don't have to do the foreclosure yourself when you're investing in Florida. The county actually does it. You just have to fill out what's called a deed application. And so when you purchase these tax lien certificates, you purchase a batch of them, you'll go ahead and do the deed applications, which is going to send that tax lien certificate to sell. Now, the benefit of that is that you're going to make your money back within 3 to 6 months. So usually, because that's usually how long the foreclosure process takes, which means that if you invest in these tax lien certificates, you're going to be earning an 18% return because you did the foreclosure. So even if we're buying a tax lien that, say, got bid down at the auction, when we do the foreclosure, we're going to automatically make 18% on that. Then when that foreclosure happens, either two things are going to happen. We're either going to get back our money or we're going to get the property. Most cases, you're going to get back your money. So you're able to get back your money and then reinvest into new tax liens. And so this is a way that allows investors to, especially for investors that don't have a ton of time and have, capital. These are really good for retirement accounts, 401k, self-directed IRAs, things like that, where investors can just go ahead and invest in them. They're not going to have the time and effort of doing the research because we've already done that research.
Yeah, in fact, it is the simplest process in the world for our members. Essentially, what they do is they're able to work with our portfolio manager, and his name's Mark Blair. And the only thing that they do is basically tell him what they want to accomplish and about how much they want to invest, and he then searches through the inventory to find the best liens and puts those together into a portfolio that he can then present to the person, and they can decide if they want to, if they want to buy that. And if they do, they simply make the payment arrangements, and the rest of the work is done for them, essentially. So it is a way to get all those benefits of tax liens without any of, without any of those drawbacks. It's a good way to earn those high interest rate returns, and it also gives you an increased chance of being able to acquire property, because rather than it being 95% of all liens redeem, when it goes past that redemption period, it's a higher chance of those that are going to go to foreclosure because so many of them have already redeemed before that. So you've got a higher chance of being able to acquire the property, and you're also able to control that time period, and it doesn't take all of the research and the time to learn everything about tax liens and tax deeds and everything else. So really what we've reviewed here is we've talked about the different types of tax sales that can be conducted here. We talked about tax liens, tax deeds, and redemption deeds. And we talked about the buying methods, live auctions, online auctions, over the counter, and the secondary tax liens, or bank-owned tax liens, which we help our members buy all of these. And we have, I would say our members are buying more liens, I think, than anybody else. We just had a member last week that paid what is it, $37 for a property they turned around and sold for $1,000 or $1,500. Was it
Yeah,
something like
yeah.
that?
$36. So I was able to pick up one of these over-the-counter tax liens in an area, and there's certain areas in the country where on some of these over-the-counter lists they'll actually let you submit an offer for less than taxes owed. So there may be $500 or $1,000 worth of taxes, but you can submit a bid for $50, $100, $200, $300, and so he was able to essentially pick this up for $36, and then and what we told him is just, we helped him go ahead and send out a letter to just the surrounding neighbors. And so all he had to do was pick up that property. He sent out a letter. Within a couple of days, he got back a response from one of the neighboring property owners that wanted to pick it up, because they were able to pick up this $5,000 value property for $1,000, so it was worth it to them, and it was worth it to him because this was his first tax deed purchase and sale, to go through that process and then offer it to a local neighbor at a discount where he made money, and also the property owner was able to made money and increase the value of their property as well.
Yeah, there's never been a better time to get involved with this and to get started. It's easier to sell property now than it's ever been before, because you can get more exposure now. I mean, 30 years ago, if you wanted to sell something, you had to probably do it through a realtor. There were just limited numbers of channels, and it was difficult to get the type of exposure that you can get today using just a simple service like eBay. With just eBay, you can sell property like crazy if you want. It's so much easier to sell it now than it's ever been before. All you need in order to make a ton of money is a cheap way to buy it. And this is the cheapest way to buy real estate, hands down. There's nothing else that comes close. So really, that covers everything that we wanted to talk about today in terms of the information, but we do appreciate everybody that came. We want to be able to offer them something more. We always like to try to offer something to the people that attend these events if they're interested in attending. So what we set up, we have our website, which is taxsalesupport.com, that includes everything from all of the training materials that you need to weekly trainings that we conduct, to support and help with your investments. We can help. We can basically help you determine which ones are good and which ones aren't. The normal monthly membership we have is $39 a month, and there's no kind of a commitment or no contract. So really, if you just signed up for 1 month, it would be a fantastic deal, because you can download all of the materials as soon as you become a member, which the program itself is incredibly valuable and helpful. But all those things are available to you as soon as you start at $39 a month. What we wanted to offer everybody here was 2 free hotline sessions, which hotline sessions are kind of like mini coaching sessions. They're approximately 20 minutes long, and can cover anything that you want to cover. We can treat them like coaching sessions where we're helping you figure out what to do next on a week-to-week basis, or it can be used like hotline where you can just call in if you have a question. But we wanted to offer that 2 free hotline sessions to anybody that signs up this weekend from attending this event, just as a way to say thank you and as an incentive there for people that have questions that want to get help. Something you'll find about Steve and I is that we're different from other companies in that we have objectives, so we want to keep the prices low and affordable. We also don't like to put a lot of fluff in our training. We want to make sure that people understand exactly how things work and that we can explain them in a simple way, or at least the most simple way that we can find. So I think you'll find with this that you're going to get a lot of help. Also, it includes all the lists. Tax sale support, part of what we do there is gathering lists from places all around the country to simplify that process for you so that you don't have to. So you can check out tax sale support and download lists, and that includes all types of lists, whether that be tax lien, tax deed lists, redemption deeds, and also the live auction, online auction, over-the-counter. But in addition to that, members also get access to our secondary liens and our portfolio manager, so they can purchase all of the liens that they want as well through the secondary market without putting in the same kind of time. So we think we offer incredible value there for anybody that is interested in getting started. And if you, like I said, if you do sign up this weekend, then we'll be sure to give you the free hotline sessions that will be included with that too. So if you do sign up this weekend, be sure, well, we'll automatically give you those, but if for some reason if you don't see it, just remind us and we'll make sure that we have those added on as well.
Yeah, and we'll go ahead and send everyone out a replay. We'll go ahead and send you out an email once we get done with this today that will have the link for that. And in addition to that, those hotline sessions, those coaching sessions are going to be with me and Shade or either one of us. So, you're not going to be talking to somebody. You're going to be talking to us personally. In addition with that, I just wanted to bring up that for students that are, or for investors that are serious, we have a small group training. It's called an online buying tour, and it really only consists about 5 to 10 investors that's going to be taking place in Las Vegas next month. And so we've already got several people that have signed up for it. We have a couple of spots left. If you'd like to attend, you can go ahead and fill out we have a form there that you can fill out, and we'll give you a call and talk about it, because with this boot camp that we're holding in Vegas, essentially what we're going to be doing during that time is not only training, but we're going to be working with investors to purchase. So that's the reason we call it online buying tours, because we're going to be participating in online auctions. We're going to be purchasing over the counter. We want investors to invest during the event. And so if that's something you'd like to be considered for, just go ahead and fill out the form on tax sale support underneath the 3-day, and we'll go ahead and contact you more about that.
Yeah, in fact, what we can do here. Let's see. I was thinking about showing everybody. Well, I put a link in the chat section and in the question section there that will take you directly to the tax sale support membership page. What Steve's talking about with that Las Vegas event is under 3-day seminar, and that's an event unlike anything else just because it's so small and it is very personable. It's something where we have a lot of time to work with each person one-on-one, which is what we enjoy doing. So you can use those links, and also feel free to ask us any questions or to let us know if you Oh, we appreciate that, Rick. You're awesome. Rick just left a comment there about being a lifetime member with us years ago, um, and the fact that yeah, we still honored it going forward. We really appreciate that, and it is important to us. Other companies are all about, I think, trying to collect as much money, and we probably should be more about trying to just get our own, but um, I think we've seen so many people that have just paid too much for training. We tend to try to go the opposite direction on it. We want to try to offer a lot of value, and what you do is important to us. It's important that you have success, because if you're not successful, then we don't know what we're doing. And so, yeah, I think it's an important part of what we do, and we make a vow. We don't want to rip anybody off ever for anything, and so I think we're always willing to work with people and to try to provide them with the best service we can.
Yeah, that's part of the reason we offer the 30-day money-back guarantee. I mean, to us, this is really a no-brainer. If you've gone out there and you've researched other training companies, really there's very little, if any, risk in working with us. And so for us, it's just really, we're not going to spend a lot of time trying to sell products or anything like that. This is what's available. And if investors are serious about investing, this is what we have to offer. I mean, we just think that, well, we really know that it's as far as the value, it's the best value on the market, and you're going to work with people that have actually been doing this. We're not just, this is a company that's been created since the very beginning, even before tax sale support, when we had other websites and other services, as a company, and as me and Shade both, as people that are really interested in your success. I mean, it's so exciting for us because we're receiving success stories every single week now. And so we have investors that are just members, that are just part of our membership, that are going out there, they're taking the list, they're using the training, and they're doing deals, and they're making money. And that, to us, there's nothing better than that. There's nothing better than to receive a success story from one of our investors that said, "Hey, I appreciate it. I just picked up this property using your training, and I'm putting it on the market. What should I do? Or give me a tip here." And we say, "Okay, here's a good outline. Let's do it this
Yeah, you can pay a
way,
lot
in this
more.
way, in this way,"
You're still there, I
and
think.
invest. Yeah.
Oh, sorry, you were cutting out for a minute, or maybe it's me that is cutting out here
Uh,
for a minute.
um, no, I think that's pretty snowy out here in Utah today. I
Yeah,
looked out the window and
yeah, there is a massive storm coming down right now. Yeah, you can pay a lot more for training if you want, but there's no need to. I think we can either teach you how to do it, or we can basically secondary liens. We can do the research for you, and essentially pick them out for you. So, yeah, let us know. You can contact us. I'm Shade at taxsalesupport.com, or you can reach Stephen at Stephen at taxsalesupport.com. And feel free to ask us any questions here to help us. There's also a line you can call to get a hold of us. So again, we thank everybody for staying with us this whole time. We'll get those replays out to you right away, and we'll also get you a link for the sign up if anybody would like to do that. So everybody, have a great weekend. We appreciate you coming, and hopefully we will see you soon.
yeah, thank you. You guys have a great week.